Hi, good evening, everyone. Welcome to Friday evening session. Every Friday, we have been conducting this session for many months now. Uh, these sessions, we want to talk about what is happening in the market, how to participate in the market at this junction, what are the various things one can look at participating in the market. Um, I want to start with my session as always, and today, unfortunately, Souradeep will not be able to join because today is actually, fortunately, today is Rath Yatra, and Souradeep is a very avid follower of Jagannath, so he is busy there with his religious things. So we will be joined by Mr. Brahmachari after some minutes of sessions with me. So let me straight away get into the agenda. So let me first welcome our trading mentorship program members, StockEdge Club members, and StockEdge members. Let me welcome you all for this session. I hope you will find value in this session, and I'm sure that you are, using the knowledge which you are gaining here for your individual improvement and skill building. The whole idea of these sessions are not to give you a stock recommendation or the market view. The whole idea of this is to empower you with the right knowledge so that you can understand our thought process and use that thought process to build yourself for your future market participation. All right. As you know that typically we don't take queries in this session, but I would definitely request Mr. Brahmachari, if he has time, he should take some questions. I will not be looking at the question panel. I will be talking about the market, my view, how I look at the market. Although I do record videos on weekends as weekend strategy, where I talk pretty much the same thing, but because I want to talk to you personally, I thought that I should take these sessions for you as well. Now, let me just start sharing the screen. All right. So can I get a confirmation that you guys are able to see my screen? Can I get a confirmation from you guys that you? Yes, thank you. Thank you everyone for this confirmation. Thank you so much, Sandeep Bhai. Thank you everyone for the confirmation. So let's get into the discussion. So, well, you people who have been attending these Friday sessions, they know this line. And pretty much since the month of early May, and this is the line and this is the discussion which we have been having, that dollar is in an uptrend, and dollar unfortunately is trading above 105 also now. So this is scary. If market dollars goes so strong, ideally all the markets should fall, and especially the risky assets will fall. So the most risky asset globally is emerging market asset. So this is emerging market fund. Okay, I share MSCI emerging market fund, and anyone who's interested in this particular watch list, macro watch list, please send an email to me at vivek@stockage.com, and I will send you this macro watch list and other watch list which I have with respect to trading view. So look at this. This is an emerging market index, which is clearly negative. So as dollar has been going up, emerging market index has been going down. In fact, Nifty has been an outperformer vis-a-vis emerging market index. Look at this. This is Nifty divided by emerging market index. So although dollar was up, emerging markets were down, but Nifty was relatively outperforming the emerging market. What does this mean? This means that if dollar goes down, again Nifty will have a higher propensity to outperforming the emerging markets, because overall Nifty has been a strong index globally. Okay, our market has been strong index globally. You can say that our markets probably have become more expensive than emerging markets, but still, based on our demographic and our China plus one thought process, Nifty and Indian market still remains a handsome investment destination globally. Second thing, let's talk about the other indices. So this is your S&P 500. S&P 500 is again trending down. So it's a sell on rise market. You see 21 period moving average and 55 is also down. So definitely markets are extremely poor, extremely poor. So this is not the market where you should buy. There is no question about it. In fact, I have been speaking about this in multiple videos that Nifty 200-day moving average is the most important indicator. If market is below 200-day moving average, you can never think of buying, especially if you are a momentum buyer, right? Can I get a quick confirmation from people who have been following me that 200-day moving average is something which I've been saying for many months now? Can I get a quick confirmation so that I can know that all of you have been following this discussion which we have been doing, right? And if at all you have tried to enter the market, even though market was trading below 200-day moving average, it was definitely a blunder which you did, because we have been constantly, continuously telling this that 200-day moving average के नीचे हमको market में trade नहीं करना है, ठीक है? Having said that, market obviously gives an opportunity for shorter tenure momentum, which can come after it breaks specific levels, but there will always be a tendency of market to get sold before market crosses 200-day moving average. So look at this. This market went up, bang. Market. So look at the trend. So what is downtrend? This is downtrend, right? When market is making lower highs and lower lows. So the fact that market is in downtrend and trading below 200-day moving average, every time market rises, there is someone who is ready to sell the market. So definitely it's a sell on rise market. There is no doubt about it. Okay. Now let's talk about an instrument called USD INR. This is USD INR. What do you think is going to happen to India? If dollar is strong, and the reason why we want people to become multi-asset trader is this reason, that dollar rupee has been giving us so much opportunities to make money, because when dollar is strong, RBI can defend rupee only to certain extent. Eventually RBI also has to surrender, and this is what is happening. So if rupee is weak, look at the trend line of rupee. Simple trend line does magic in market. So if rupee is weak, then there is no question of market showing extreme strength. But yes, there are certain sectors which are export oriented, which will show strength when market recovers. And which are those sectors? You have IT, you have chemical, you have textile. These are the sectors which are now export oriented and will see the beneficiary when market recovers. Okay. What is the chance that dollar index will go down? Very remote chance that dollar index will go down because of this character. This US yield, they're still on the upward curve, although there is a resistance which US 10-year yields have faced, but doesn't look like that it is going to go down in a hurry, because inflation in US, inflation is still high. This is inflation in US. Producer price index is very high in US. Real inflation is actually producer price index, because crude oil is the largest contributor of this inflation. So if it is up, then there is no question of yield going down in a hurry. Okay, so you see all the yield is trying to consolidate, but definitely it's not going down massively. Look at Bitcoin. This is the riskiest asset right now, and the way again there is a selling coming into Bitcoin every time dollar goes up. This is scary, because the more people will lose money in Bitcoin, the more people will square up their productive assets like equity. So liquidity driven selling is something which is happening globally, and it may continue till our dear friend dollar shows sign of strength. And dollar will only recover when inflation is under control, and inflation will only come under control when this bugger, crude oil, Brent crude oil, it will correct. So broadly, market is negative and we can't deny this. So how do we trade? ये तो चलो ज्ञान की बात हो गई. अभी आप बताइए मैं ट्रेड कैसे करूं? So some of you have commented that sir, I am only doing intraday trading. It's not a bad idea, because intraday के अंदर में छोटे-छोटे movement अभी market में आपको मिल सकते हैं. How do I trade? So principally, I am not carrying any momentum position right now in the market. Principally, I am only looking at value investing. So I'm constantly doing SIP in the value stocks. So one of the value stocks where I've been doing SIP constantly has been Reliance and SDFC, Kotak Bank. So all the mother stocks, InfoEdge, obviously their value has also gone down. Today Reliance is down by 8%, which is okay, because for me these are value stocks which I want to retain over a longer time frame for my kids. तो मुझे उस पे कोई प्रॉब्लम नहीं है. तो 30% of my allocation in value stock is still intact. However, my momentum stocks I have been liquidating for a long period of time. I may still have some stocks left because their relative strength has not turned negative yet, but purely from a momentum perspective, I am not buying new stocks. I will only buy when market gives me that convincing rally. Okay, what am I doing for intraday? So this is the template which I have for intraday, and this template is helping me to be in the market, practice the market right now. So what is this template all about? This is a 15-minute chart of 4 major indices in market: Nifty, Bank Nifty, Nifty Mid Cap, and Small Cap. Okay, what am I doing is very simple, looking at the dollar index, because dollar index is my primary guiding factor. Looking at my dollar index, I am trying to trade market on one side. So if dollar index is going up, I'm not buying the market. I'm finding opportunity to short the market. For example, this was a great short opportunity because all the indices went down very rapidly. In fact, there is an opportunity to go short again coming into the market very soon. When dollar index will either go up aggressively, then there's an opportunity to short the market. So the best way to trade the market, look at the dollar index, look at crude oil, look at yield curve, and find out major resistances or major support for the market. If dollar index is going up, try to play short as much possible. If dollar index is going down, try to go long in the market as much as possible. Take smaller profits. Even in stocks, yes, you can get opportunities in market, but then these stocks momentum should be played for very small period of time. And how do you get those opportunities? Simple momentum indicators like 52-week high. Okay, look at these indicators, simple indicators. Price can go to 52-week breakout and see the stocks which are closing within 52-week high zone. Now these are the stocks where typically momentum can come. Or to make your life easier, we have these strategies. Go to a simple bullish swing strategy, go to Eagle, find out stocks which are Eagle stocks, and try to participate in those stocks every time they show a build up in the momentum. Example, Blue Dart. Look at this stock. Let's go to my template. And people who don't know this template, who have never attended my session, please do watch my webinars. You have access to my webinars. And also people who don't have access to my webinars, my YouTube channel has explanation about my model. My YouTube channel is a Hindi channel, so if you can understand Hindi, you can watch there. Or my English webinar is available in Elearnmarkets. So let's go one stock by stock. So let's take a small example of this stock called Blue Dart. So Blue Dart has been an Eagle stock for many days now. And look at the movement of Blue Dart. Let me show you this. This is 30th of June, right? Let's go back historically, 27th of June. Let's go back, say 24th of June. Let's go back, say 23rd of June. Let's go back again, say 22nd of June. So 22nd of June, Blue Dart was a Eagle, right? So this stock has been Eagle stock for so many days. If you would have just followed this Eagle list, you would have taken advantage of this momentum which the stock is showing. And momentum is very simple. My model is on a EOD basis. If RS is positive 55, if 21 RS is also positive, and in 2 hourly RS is positive, just buy the stock. But play only for shorter swings, maybe max 10%. Do not expect a convincing sustainable swing in any stocks till Nifty crosses the 200-day moving average. So look at these Eagle stocks, play momentum in these Eagle stocks. There are some stocks which are extremely strong and they will have propensity to show you the strength For example, let's take this ITC, which has been a eagle stock for some time. Look at the strength this stock has for so many days. But will I go aggressive and buy ITC with lot of capital? My answer is no, because Nifty is still trading below 200-day moving average. So for me, this setup is giving me confidence to participate very softly into the market, into these stocks. But as far as Nifty is concerned, till Nifty gives me a convincing follow-on breakout, I will not go aggressive into the market, because there is a high chance that we can see follow-on negative movements in global markets, right? So this is it from my side. I hope this session was useful, and now I would like to invite lovely Mr. Brahmachari. Really respect him for his knowledge. I also want to hear things from him, so let me invite Mr. Brahmachari to take it over from me.
Thank you, Vivek.
Yeah, thank you, sir. Thank you.
Right. See, before going into the market analysis, are you able to my screen? See my screen?
Yes, sir. We are able to see your screen, sir.
Yeah. See, before going to the market analysis, I would like to say some sector rotation, how it is happening. Okay. So this is a rotation, relative rotation graph, RRG chart. So these are the sectors in the green sector are relatively performing better than the CNX 500 index. Okay. So now this is the auto index, which we discussed earlier. I think on Wednesday we discussed about the auto sector is better placed. Yes, exactly, it is better placed, but the rating momentum is currently at the exhaustive stage. It may retrace some little and goes up again. So that retracement should not be disappointing you, and only in case of your trailing stop loss will save to you by any automobile stocks. Today, I think we have seen all the FMC stocks were in very line. That is, FMC sector is also in the very great position, relatively performing well. But today's move in oil and gas sector, because of the refinery margin news, so even before that also it was coming down from the very better position from to here. So I can show you a relatively how it is moving around. So see, this is the thing happened now. So this is the thing, how the relatively it was coming from here to here and then came down to here because of the oil and sector gas news. There is a news driven also, but at the same time there are certain pockets in the banking and financial which also into the green sector, private bank particularly, and the Nifty bank index as a whole. So these two segments, particularly private bank sector, is performing little better, and the financials are improving and improving towards the leading quadrant. So that is going to be one of the key dog horses. Please select one of the key dog horses in the financial services sector. Okay, and there is just now I think Vivek has discussed about the dollar index is rising, dollar is rising, which is one of the major beneficiaries IT sector. That's the reason it is came from a weakening sector to lagging sector, and lagging from logging to it is improving its relative performance. And I think next 1 or 2 weeks it may enter into the improving quadrant and the leading quadrant. So if you have a patience in the IT sector, select some stocks which are relatively performing better than the IT index itself and better than the broader index, Nifty 500 index. So select those stocks in the IT index, and then it will move to the improving quadrant. And there is no, I think the weakness is almost at the end stage. So I think next 2 weeks is going to be concentrated on the IT and financial sectors. These are the two sectors. Realty is little bad shape because it was entered here but came back again in the lagging sector. So don't touch realty now. And even the consumer durables is also a discretionary spending, which is also very negative because of the inflation and other interest rates are high, and the media index is also not a good shape. Look at this metal index completely at a lower end of the lagging quadrant. These are the sectors to be focused. Next sector, first the leading sector is FMCG and the financials and banking sector and the IT sector. These are the sectors you look at for the next 2-3 weeks. and then select some of the relatively performing better stocks and go long in those sectors. Okay, this is what I wanted to show you on the relative, what are the sectors going to be perform better. So I think we discussed on Wednesday about the DXY dollar index. When we discussed, it was 104, now it was 105. If you look at this dollar index, I said sometimes I said 120 is a target. There is a rationale for that. So how it will go to, see, this is the $15 difference between the high and low base. So from here it was broken about 103 level, right? After 2002 onwards, it was the maximum level. This is a level where in June 2000, this is the level where earlier around 2012 June level we are trading now. So even the current base of this last 5-year base is about $15. So if the breakout happened this level, that means around 103 plus $15 is almost $128. That's a target. So if the dollar index is $128, DXY is 128. Generally, DXY, all the dollar index have an inverse relationship with the equities. That means if the dollar index moves up, equities will go down. Like Vivek said, that all the emerging markets, risky assets will be in a downtrend, clear downtrend. So be careful about equities, trading about equities. But as long as dollar index is on rise, better avoid equities for a longer period of time. So this is one thing I wanted to concentrate. And the second thing is the sectors which we have already discussed just now. These are the sectors within our Nifty. As I said, Nifty auto index is performed well, but it is retracing back. That's what exactly shown here. This is an exhaustion. Okay, this exhaustion may end somewhere. This block line is a Nifty 500 index. Whatever above this zone is relatively performing better. As I said, FMCG is improving, right? And the pharma is little improving, and the consumption is also little improving. Consumption means FMCG, not the consumer durables. Okay, and the MNC stocks because of the dollar thing, and the services index. So these are the few good sectors to concentrate now, and these are the leading sectors now. At the same time, within the lead sector, address the leading.
Sir, Mr. Brahmachari, I think there is some problem with your audio setup. Mr. Brahmachari, I think are other guys also facing the problem? Can you please confirm in the window? Yes, yes, yes. Mr. Brahmachari, there is some problem with your internet. Are you able to hear us? Yeah, guys, can you please hold? I will just check with. I'll just check with him. I'll just check with him, sir. Please hold for a minute. Yeah, I think he is logged off, and probably he will try to log in again. Can you please hold for a few minutes before we try to connect with him?
This is taking RSS is giving some signals. No, that's not the case. But this is a clear. But
No,
this
no,
is a clear bearish.
There is some
Hello.
problem. Mr. Brahmachari,
Yes, sir. Yes, Vijay.
sir, your internet
Vivek.
is not stable, so we are losing you at times.
Okay, 1 second. 1 second.
Yes, I have communicated to
I'll
Mr.
connect.
Brahmachari. Guys, please hold for a few minutes. He's changing the internet connection. Please hold for a few minutes. So this is a very interesting study. The RRG graph, the sector rotation thing. This is a very interesting
Yeah.
study,
Okay.
and I would suggest
Right.
people who have a bit interest, they should look at this study. Yes, sir. Mr. Brahmachari, you are audible now.
Yes, thank you very much.
Over to
So
you, sir.
now don't be very bullish because of, yeah. Thank you, Vivek. So don't be very bullish on because of this 100 MA is acting as a support for the last 2 weeks. But at the same time, current week's candle, this is nothing but a bearish belt hold because the open is high and close lower. At the same time, the index has failed to move above this inside bar strategy. That means this is an inside bar, this is a motherly bar. Once the Nifty closes above this high, then it will be a bullish day. Even yesterday also we discussed about the retracement levels. Okay, so I'll come back to the retracement levels of the previous things. So 1 second. See, this is a retracement level of where it exactly facing the retracement is 38.2 retracement levels. It was went up one day but closed later 2 days. Okay, and even if it is also if we convert it into the candlesticks patterns, even then this doji gets a confirmation here. So at the same time, this is nothing but a confirmation for a bearish flag breakdown because the it opens low, but it exactly closes on the support level. So what are the targets we are looking at now? Unless until it moves above this level, that means 50% retracement level, or a 50-day, which is almost at the similar level. Just now, Vivek said that 50 DMA is one of the major resistance or a trend indicator. Okay, so that is exactly at the 61.8%, and at the same time it is an upside breakout. Unless until this gap filled and moves above this 213 levels, we cannot be bullish. So other way, see, look at this RSLM. Again, this is a Cardwellian method to track the markets. See, look at this sloping line, and at the same time this is the channel, and this is another channel within the RSI, right? So as long as it is below within uh, RSI channel, so this channel, better be cautious on the long side. Don't go long until it breaks above this 55 zone. As long as 55 zone is not crossed, we are not bullish. Okay. Once this 55 zone crosses, automatically this price move above this level, 16,200 level. As long as it is trading below 200 DMA, sorry, below the 61.8 retracement level of the prior level. At the same time, as long as it is below the 50 DMA, and at the same time 20 DMA has to be turned up. That means it should trend upside like this. Unless until it comes to it, don't be bullish. As long even though it is above 20 DMA or 50 DMA, 20 DMA has to turn up because all the moving average has a strategy to as a conversion has a strategy. So unless until averages are turning up or in a trending higher, then the price is even above the moving average is better be cautious on the long side. So okay, now what is the downside we are looking at in the index, right? See, these are the swings we need to calculate. So this is one swing from here to here because we are not consider this as a swing because there is a lot of consolidation happened here. So now, so there is a Fibonacci technique which is I will be teaching in I think next webinar on Elearnmarkets. There is a 3-point Fibonacci retracement because this is a continuation pattern, right? So all the continuation patterns will have one set. Before that, I'll explain about how it was fallen. One second, and see, the fall was stopped at 61.2% and little exactly at 100%, right? So the length of this is fall of this is equivalent. So now we take the next thing. Now the next thing is from here to here, and this is the next high. So now it was taking support at 23.6 retracement level, exactly at the level. Once, as long as this 0 point is not broken, that means this swing is negated, this retracement is negated, then automatically it falls and tests this level 14,400 300 levels, which is exactly what we discussed on Wednesday's live session. So now the first target is once this 552 is broken, the next is 15,300, which I said earlier, and then these are the levels. It may take support at this level because it's a anytime 61.8% is whether it is a strong resistance or a strong resistance zone. So these are the exact levels we need to watch now. And we'll go to little lower time frame chart. So this is a 75-minute chart. Why I select 75 minutes? Why not half an hour or why not an hour? Because Nifty trades 6 hours, 7 minutes. But if you divide this 75 minutes, each bar will come into this exact bar will come. If you look at the first hour bar, if you hourly bar, 9:15 to 10 o'clock takes as a 1 hourly bar because it is only a 45-minute bar. Even if you take 25 minutes or 15 minutes, it works exactly. Either you follow 15 minutes, 25 minutes, and 75 minutes, not 30 minutes an hour. So that's one technique we need to use. Okay. So look at this. Before this move comes, look at this identical moves. So opens gap down, goes up, opens gap down, goes up, and again there is all these moves were retraced, and it goes up to again the back to the previous day low. So this technique has to be again, even in the short term, there is a flag pattern. So that means it has to go up and come down like this. Suppose, see, sorry, this is the lowest band, a highest band, and a lowest band. So now these are the resistances level, which exactly what we discussed just before on a daily chart. This is the level. So this zone is to be very strong resistance for now. As long as these resistances are broken, we need not to be bothered about the very sets. So even on the risk reward ratios level also, all the risk rewards are more than almost, sometimes we need to take 1:1 or 1:2 is always good, but in these conditions 1:1 is almost every day we are getting some chances on trading them. Today we have traded one on the Nifty, exactly we exited at a bonds. This is the actually bonds we exited because of this hammer as a Garata confirmation for the bullish reversal. Opening trade was exited here. Very good, 100 points we got it on this. And again, this is a ribbon of moving average. On a shorter time frame, it closed within this ribbon. That means it is still in a neutral zone, and the MACD line is still below the zero line. These are the indications of market is in neutral zone at the end of the day. So as long as Nifty closes complete bar above this ribbon and MACD line must be above zero line on a 75-minute chart is a bullish signal on Monday. So as long as this is not broken levels, then automatically you have to wait for the next trade. So the next trade will be either above this swing high, a shorter swing high. That means automatically above this moving average ribbon. That means this moving average ribbon also turns up like this. These are the indications to buy above at these levels. That means this channel was broken, and at the same time price, the breakout was failed, and the price is going into the channel again. So that's a failed breakout of the upward channel. So these are the logics on the shorter time frame and the daily time frame and the longer time frame, which we analyze now. If you look at the bank nifty, is little very structurally moving on a weekly chart, on a daily chart, and every time frame. So this is a weekly chart where exactly the same structure is in as seen in the nifty. So this is the divergence happened. So this was broken, but exactly the swings lows were connected and moving higher. Now it is exactly at the resistance level, which is now trading and get back to the moving downward. So once this is broken, and automatically this swing has higher, and the bank nifty is a probability of testing this resistance line. So that means roughly about 35,000 levels. So at the same time, I think I have shown some of the there is another. I have posted one weekly and daily charts in StockEdge Social about the anchored viewer. I can show that now on a StockEdge live, which is very intrinsic by anchored viewer. So this anchored viewer actually Brian Shannon
Mr.
was
Brahmachari, Mr. Brahmachari,
yeah.
Actually, I think there is today some internet issue
Yes,
at your end, because there is a lag between screen and
oh,
your voice is also getting broken.
sorry.
Is there any other internet connection by any chance? My apology for bothering you.
Yeah, it is full. Signal is completely full. I think you can see here. What may be cause? I think. So I think next time I'll improve my internet connection. And if there
Right.
is
So,
anything.
sir, would you like to stop the screen sharing and then just talk? Is it possible for you to do that? Because screen sharing is consuming probably a lot of bandwidth.
Yes. I can stop sharing the screen also.
Yes,
Now,
sir.
okay. Now, the question is the 2020 level before January, there was a high, no? If that high was taken as a academy web anchoring point, then that was broken about I think in May. So there was a huge gap up opening was happened. So that gap up opening was given a clear signal that it was going very uptrend. Exactly at that level, it has there is resistance that it has support levels now was broken at the support level. Now on a feature as a resistance. Sorry, 16,000.
No, Mr. Brahmachari.
16,382 is the anchor wave of resistance. As long as it is trading below that level, better be stay cautious. Now, the internet
No,
yes,
Mr. Brahmachari, we are not able to hear you, sir. Sorry about that, but we are not able to hear you. If I'm just switching off the screen share. Would you like to speak now and see without screen share? Can we speak? Yeah.
Yes.
So can you please speak now?
Yes. See, yeah. Am I audible now? Yes.
Yes, sir, you are
Okay.
audible.
So now my levels have explained in the chart. Okay, my levels are explained now. I'm looking at the gap area of 16,200 levels on the top. That's the maximum level. We are looking at the bonds, current bonds. Today it formed a long shadow on the bottom, which means the buying support was happened in the late in the afternoon or first hour of trading. So that's an indication of some resilience is there before falling. At the same time, it has to cross the Monday's high. So as long as Monday's high is not broken, then we need to be cautious on the long side. Once the Monday's high was taken up, then we can go ahead with the long positions. So the weekly candle is a bearish build hold. So that is an indication. At the same time, RSI has still below the 50 zone. So that's not also good sign. On a lower term chart, like 75-minute chart. Hello. I'm extremely sorry, Vivek, today. I think there was a big issue. I have connected with many other things also. I've tried.
I think, Mr. Brahmachari, unfortunately, today is one of those days when tech is not, favoring us in any way. So, not a problem, sir. We know that it's an unintended disruption which is happening. So, but we got the essence of what you are saying, sir. So, small request, if you could, if possible, you could share your template in StockEdge Social that so that people can take advantage of that template. So, okay, let's do something. Hello, guys. Let's do something now that we are together, and I can talk about few things which can be of good knowledge value for all of you. So let me just do my screen sharing, and you know, someone has actually mentioned that I can talk about few things here. Now that we all are here, around 300 plus people are there. So let me do that. Let me do a screen sharing of my screen. Uh, so just give me a minute, please.
Hello. Hello.
Yeah, Mr. Brahmachari, I think there is some problem with the internet today. So
Yes.
let's continue the same session with you next Friday if you are available, sir.
Okay.
And in the meanwhile, I would
Done.
request you if you can share your template on StockEdge Social so that people who are interested in designing your template as per your study, they can also design it in their software.
Yes. See,
So,
this is the anchored weaver setup, which is a low, and this is the break-even gap. So this is acted as a support here, and support
sir,
here,
we
which is still.
Mr. Brahmachari, we are not able to see your screen because we have switched off your screen because of internet. So what we will do is, sir, we will reschedule your session for next Friday with a better internet connectivity. Let me just take this opportunity
Done. Thank.
to discuss about a few things around StockEdge so that people who are attending, they can learn new things from me.
Yes,
Sir?
sir. Go ahead.
Sir, so we'll do it next Friday, sir. Thank you. And we got the essence of your view. At least we have a common view about the market. So let me just get into some screen sharing and talk about few things which may
Yes.
be of interest for our learners. Right, sir. Thank you. So, guys,
Thank.
here I am back. Now, there are two things which I really want to talk to you guys about. Assume that you are interested in swing trading because this is the entire stockage is designed in such a way that anyone who's interested in doing swing trading can use this as a very strong data intelligent platform. So there are two important outputs which we have created, and I really wanted to talk to you guys about it. One is the market breadth, and I have posted this in a couple of my tweets that this is very important output because it gives an understanding of the overall breadth in the market. What is breadth? Breadth means how many stocks are showing breadth, so that if market has to go up, there should be overall when market goes up, the big stocks have to go up, right? So you see what is happening in market. Market was showing extremely poor breadth here when market was around 15,350, 15,300, and market recovered from here. So these are good contrarian indicators. So if there is extreme pessimism in the market, which is the fear zone, market tend to recover from those pessimism points. So this was the point where market recovered. Right now, if you see the market bread, 34% stocks are above 20-day moving average, 50% are above, 20% is above 50-period moving average, 22. So this is largely a good consolidation area for market. Do you agree? This is a good consolidation happening. Some stocks are showing strength, some stocks are kind of standing there. So this is a typical consolidation. And look at this RS 55. This is around again 50%, 46%. So I think market overall doesn't want to fall aggressively. There are stocks which want to stay where they are, and they are waiting for market to recover to go up. Let us see overall bread from Nifty 500 stocks perspective. So here also you see the bread was so bad when market reached around 12,951, and then Nifty 500 has recovered to 13,380. At these levels, the breadth is not so bad, where it was very bad when market went down. So overall breadth is suggesting that market is not willing to fall aggressively. Okay, actually breadth meter talks about the intensity of the fall, and whenever breadth is gone very bad, there is a chances of a recovery, and whenever breadth goes very good, there's a chances of a fall. So right now it is kind of a flattish zone. This is 1 year uh, high-low zone. So see, almost 25 stocks are at a low zone, 23 stocks are a mid zone, and only 2 stocks are in a green zone. That means based on last 1 year performance, a lot of stocks are still trading on a low zone, which is quite obvious. But look at from a last 1 month perspective, is this getting better? So no, it is not getting better. It has gone bad in last 2 days. So yesterday's market action, although market may not have moved much, but the breadth of the market was clearly suggestive that there is something wrong in the market because the breadth has gone weak. Okay, so breadth is a good trend indicator as well as contrarian momentum indicator. So when the trend is down, you also be on the short side, and when the trend is kind of when the fall has become very extreme, you can become a contrarian in the market. So right now market is definitely weak, there is no doubt about it, and it is not showing any signal of extreme fear in the market. So there is some room for market to go down from here. Okay, the second output which we wanted to show you is this derivative analytics output. This is also very interesting. So to find out stocks where there is new positions, so aggressive long, say let's figure out shorts where there is aggressive new long position apply. So these are the stocks which have aggressive long position. So what are the stocks? So these are the stocks with aggressive price movement and increase in open interest. These are all derivative stocks, which is quite obvious. And also they have witnessed good volume and delivery. So let us see a stock where there is, so Honut, what is Honut? This stock has delivered good volume, good delivery, and OI increase is also quite high, and price has also kind of gone up. So look at this stock, Honeywell Automation. Now what we need to do is look at the chart of Honeywell Automation and see what is the stock strength or the weakness in the stock. So let's go there and see. RS is negative. Stock price movement is showing uptrend. Super trend is positive. So I would probably be mentally positive about this stock. Okay, but I will not buy in a hurry because market is weak. But at least I will try to create that positive framework for this stock. So let's go to Honeywell Automation from here. Let me see trading view Honeywell Automation. So this is Honeywell Automation. No. Right now, I will not look into this stock to buy for sure, because based on my RS model, it is still a weak stock. So although there is an OI buildup, but I'll still wait for the confirmation for my price action to buy this stock. Let's look at other stocks in Britannia. So what's happening with Britannia? So all of us at the end of the day should do this homework, because ultimately where will you get the stock ideas from? You have to do these homeworks, and the homeworks includes derivative analytics. It includes delivery data study and figure out stocks where there is potential of this going up. Britannia looking so super. Look at its trading, strong stock, trading above all moving averages. RS is above 0, 2 hourly RS is above 0. This is a great level for breakout. 3500 stock above 3500 looks good. I would be interested in buying this stock for some momentum in this stock. Fair enough, because OI buildup is also here. Now look at this historical derivative analytics of Britannia. Okay, so if you look at the price action from 34, it has stayed around these levels, 3400, 3500. And if I look at the OI trend in this stock, so from 32, 3350 to 3450, so the OI increase is there. So that means clearly this stock has a positive bullish orientation in market. So from a RS perspective, positive, from a OI perspective, positive, from delivery perspective, positive. So everything is looking positive for this stock. So should I think of buying? Yes, this is a stock either I can buy at retracement around these levels, or I can buy small quantity at high levels, especially when the stock will give a breakout from these levels. Okay, make sense? Are you guys with me on this? Hello, everyone. Can I get a quick confirmation? Hello? Yeah, thank you. Thank you, Chirag. Thank you everyone for confirming. So, I mean, there are techniques which can be used, and there is enough output which has been given in StockEdge for you guys to use the technique. So this is largely for people who want to do swing trading, okay, and people who want to do investment. This is also amazing work which we are doing, rating stocks, giving you stock ideas which are rated, highly rated, and these stocks are near their support zone. So you can look at these stocks for your investment purpose. You can create basket of these stocks because these stocks are currently trading at around buying zone. So for people who are interested in investing, start looking at these investment ideas. For people who want to track big investors, look at the key changes which is happening here, because finally big investors getting in or getting out is also equally important in any stock. So if someone is getting in, that means a strong stock. Someone is getting out, that means a weak stock. For example, Radhakishan Damani has entered in Sundaram Finance in last quarter. Let's see Sundaram. Let's see Sundaram Finance. It's a weak stock right now. So for people who want to ride momentum, they can wait till the momentum comes back. Or for people who want to do value investing, do some fundamental, because Mr. Damani is there. So I'm sure he must have done some fundamental due diligence before he invested. But what I do preferably look at these guys, see how they are increasing their stake in the company. And if the stock is strong, then only I participate. Otherwise, I don't participate. So, all right, guys, this is it from my side. And this is it from all of us. Thank you so much. Thank you so much. I hope you found today's session useful. I really appreciate all of you joining, and just keep joining every Friday. And people who are part of StockEdge Club, please use StockEdge Social to the fullest. TMP members, please use us to learn trading very properly. And finally, StockEdge Premium members, please subscribe to StockEdge Club. This is one community which you can't miss. You have to become part of this community. Thank you. Good night. Have a great weekend. Relax. Spend quality time with your family. Don't think about market too much on weekends. There is so much we can do. We can play cricket. We can play football. We can swim. We can read books. We can go for a movie with kids. There is so much we can do on weekends that we should not bother. We should not allow market to bother us and our personal life. We'll see you again on Monday. Let market do what it is doing. Maybe tomorrow, 2 hours of a bit of understanding and doing homework, weekend analysis will make us better prepared in the market. Till then, good night. Please take care about yourself.